Hello, my name is Gui Costin, founder CEO of Dakota, and the Dakota Way is officially live on Amazon, where you can buy it right now, both Kindle and soft copy. The Dakota Way covers the 4 core principles of investment sales, which is 1, set expectations, 2, know who to call on, 3, know what to say, and 4, have a killer follow-up system. These are our internal nomenclature for how we describe the things that we should be doing to become world-class fundraisers. It's all in the book. It's incredibly simple, which is the good news. You can buy it on Amazon. I promise you it works. And if you have any questions, you can always email me at guy@dakota.com. The book's available at Amazon right now, both in Kindle and soft cover. Thanks so much and have a great day. What is up, everybody? It's Gui Costin, founder, CEO of Dakota. Welcome to the latest edition of the Emerging Manager Growth Show. This is a unique one. I think this is the first time it's ever been solo. We have all of our investment sales team members. Normally they're sitting right next to me as we go through this. So for those of you who don't know me or Dakota, if this is your first time listening, we started Dakota in 2006, and we've been a third-party marketer for the past 19 years, raising between $25 and $30 billion. What's significant about this is almost in every case growing these businesses, we were working with emerging managers who either had small mutual funds, 1 million started with Hamlin, Edgewood 25 million in the mutual fund, and we've helped basically firms go from emerging managers to established managers, established brands in the marketplace, all based upon the Dakota Way, which is my book. We started the concept of the Dakota Way in 2011, which I'll talk about today. And then we launched the book in February of 2025. And if you would like a copy of the book, just email me, guy@dakota.com, and I'll be happy to send you a signed copy. And then secondly, just to finish out who Dakota is, in 2019, we took the database that we built using Salesforce.com and we commercialized it. And what that really means is we opened up our database and then we hired a bunch of people and have grown the business. Today we have over 1,275 investment firm fundraisers using our platform to raise capital. So it's a fully built out database of intermediary and institutional investors globally. One of our cornerstones is the RIAs in the US and then the global family offices, which everyone is, especially on this call, it'll be very important to have those RAs because that's really where you need to start as an emerging manager. So philosophically, as an emerging manager, the reason we created the show is I would get a lot of phone calls saying, hey, can you do a call to talk about how we should be marketing our investment strategies? And so instead of, and I'm always happy to jump on a call, but I was like, why don't we just create a show and we can talk about it and the things that we've done over the course of our career and the advice that we give to emerging managers that almost exclusively have to do more with less, right? You don't have the resources. You generally don't have a big distribution team. The CEO might not exactly know, distribution, if you will. So if you're working at an emerging manager and you are a one-person shop trying to figure it out, there's basically like no infrastructure. What do you do? How do you grow the business? And so we've used this plan time and time again to achieve, outsized success. In fact, we just started working 3 years ago with a $1 billion manager called Spruce. They do construction loans to multifamily, and that's late in our career, right? So that was 3 years ago. That's 16 years in. Still working with an emerging manager, getting them from $1 billion to $2 billion. Now they did a lot of the work too, but we've been able to have a lot of success with them. So point is, we do walk the talk. Okay, so what do you do as an emerging manager? So if I was in your office and this is a conference table and I'm looking at you, this is the advice that I would give. So number one, depending upon your strategy, you have to figure out, right, what's the initial channels you're going to go to. Emerging managers, the definition is somewhat wide, right? So, if you're very, very small and that's an emerging manager, then that could be a little more friends and family. However, for the most part, if you're an emerging manager, right, this is all going to be about cold outreach and reps. And ideally, you're going to have to go to the channel that has discretion, which is the RA channel. And RAs all make individual decisions. There's no top-down. Like if you go to Morgan Stanley and get approved, you have that top-down leverage. There's none of that with the RA channel. So one, you're going to have to focus on selling to RAs. And then you say to yourself, okay, what's the plan of how I want to go about doing that? So a few things that you have to ignore that are somewhat myths out there. There can be some reality to it, but I'd say for the most part, it's just not true. Number one, size of your fund, length of track record. Look, you have no choice. The way that we've gone about it is we call turn your brain off, don't overthink it, right? And you have to pick, ideally, again, if we're working on like budget and sort of you have to do more with less, then I would recommend starting in the metro areas that are closest to wherever you're located. So travel and expense and hotels and everything are within a budget. And so, for instance, if you're in Philly, like we are, then what I would do is I would focus on the Philly RAs, New York, Boston, and Baltimore, DC. That is a really large swath of RAs that you can get to by essentially driving. And the only way to win, okay, is to put those cities on the calendar. So that's 4 to 5 cities, Baltimore, Washington, Boston, DC, New York, Philly. So put those on the calendar, right, and schedule 3 weeks out, and then go into your database and start booking meetings with those RAs. That's the only way to go about it. And it's just consistency. Cold outreach does work. Cold outreach is hard. The reason cold outreach is hard is because no one went to college to send cold emails to book meetings. We all get it, but that is the rite of passage, right? You can't end up raising capital unless you get face-to-face with potential investors. The good news is RAs love new and interesting investment ideas. Now, they can't take every meeting, right, because they're getting 200 email requests a day, but they do love new and interesting investment ideas. So how do you go about city scheduling? That's what we call it internally. That's what I call it in the Dakota Way book. How do you go about it? And remember, don't worry about length of track record. If you have an LP, okay, we happen to have in our database a list of LPs from the form ADV that we bring into the platform. I think it's up to like 386 plus that have their basically own fund of funds, which means they can put your LP in their fund. You don't need a quarterly tender fund. You don't need anything special. Your LP works, and then you can identify those in these cities that I'm mentioning, and that is a lot of wood to chop, if you will. And you're just seeing more and more RAs create their own fund of funds, so then they can bring your fund into their fund as one investor, and they spread it out across their investor base. So don't get too caught up in worrying about fund structure. Naturally, if you have a mutual fund, an active ETF, a separate account, if you're on the long-only side, you can do that. If you're alts, your LP is fine. And listen, you don't just have to focus on those fund of funds because there's others, and also just in terms of size, the larger the better, right, if you will. And people like to take chances on and get to know emerging managers. And we see a lot of you because we do the Form D every single day. New funds are formed, $100 million close, $150 million. So back to the RAs and city scheduling. The key here is your email. And for better or for worse, it is what it is. There's a few things in the email that you need to get open, and these are cold outreach emails. They do work. First off, meeting request, date and time in the subject line. That's killer. Subject line, May 4th at 3 p.m. Meeting request, May 4th at 3 p.m. Why? Because if you get an email that says meeting request, you end up opening it because you want to know what the person wants to meet about, right? Now the person opens it. Are you able to, in 1 to 2 sentences max, introduce yourself, your firm, who you are, what you do, and why they should care? This is where you have to give a lot of thought to just using your words wisely. So when they can scan that and they can immediately say, oh geez, okay, this is a concentrated large cap growth fund managed by a very experienced team for an extremely long period of time with a large asset base. Now the question is, do I want to talk to someone about that? But you're able to communicate exactly that very quickly into their mind for them to make a decision. The end of the email needs to be a clear call to action. Can you meet May 4th at 3 o'clock? Now, a lot of people debate me on this. A lot of guys will put 3 different times. We have found if you say 3 o'clock and they want to meet to talk large cap growth, they can say, no, I can't do 3, but I can do 1, or I can do 4:30, or whatever it might be. What you're trying to do in your city scheduling process is always have 5 cities on the calendar and circle 9, 11, 1, 3, and 4:30. In talking to people about this, we really try to gamify it. So circle 9, 11, 1, 3, and 4:30, and then you have 5 cities. That gives you 25 meeting slots. And so you have to send 20 to 25 emails a day, reaching out to do that cold outreach. If you're not getting responses, really focus on the body of that email. No paragraphs, just the sentences, and have that clear call to action. But really work on the sentence. That's really the key. And if you want to have even sort of more fun, and then you can get into sending a lot of emails each day. It really has to be a core part of your day. If you're an emerging manager, you're a salesperson. If you're playing both, you're a portfolio manager and a salesperson, I'm just going to tell you it's not going to be easy. It won't necessarily be fun sending all those emails. You cannot do it in mass. You can't send a mass email. And why is that? Because then there can't be that clear call to action. These are individual, bespoke emails that go out, and you're looking to book those times. Now, I have had somebody said, hey, I sent 50 emails and just to meet at 3 o'clock on the same day. It's not my style to do that, but this just takes discipline and consistency. And if you can separate the mental anguish of feeling sorry for yourself, that's the only emotion that we generally have when we're sending cold emails, like, did I really sign up for this? But if you're an emerging manager, you did, and you started a firm, the way to raise money is to get face-to-face with potential investors. The more you can do that in size, the more you can make your strategy sound as interesting as possible, the better. Now, why cold outreach? I'm going to give you a dirty little secret that people don't consider this. If you're consistently doing cold outreach, and you're doing it consistently across certain cities, people are seeing your brand. They are seeing your name. They might drag that. This is why it's important to have that body of the email to know exactly where they should position you. They might not take the meeting, but they might drag your email into their large cap growth folder or their private credit folder for later review. So they see your brand, they see your name. Okay, they don't respond. Okay, now 3, 4 weeks later, 6 weeks later, you're back in the same city, asking again. They see your brand again. Oh, Guy's reaching out again for Edgewood large cap growth. Okay, and he has an update. Drag that in. Now's not the right time, right? But they're not going to tell me that. They're just going to think that, right? And then over time, you're building brand awareness for your brand with your consistent outreach. This is all, right, a familiarization process. That's the whole thing about fundraising or raising capital. You're just trying to create the deepest familiarity. Now, this is the front end, the significant front end of the familiarity. So you do the familiarity, you do it consistently. That is the way to win as an emerging manager. So that's point number 1, RAAs, city scheduling, close proximity to your home office, your headquarters, and the email. Subject line, meeting request, date and time, really tight 1 to 2 sentences on who you are, what you do, and why they should care, so they can then make a mental decision whether they want to take that meeting or not, because you've said, can you meet May 4th at 3 o'clock? So you've made it very easy. If you choose not to go this path, I'm going to tell you what you're doing, okay? And you're not doing it consciously, you're doing it subconsciously, you don't even know you're doing it. You're literally telling your prospect to do the work for them. Hey, can you meet sometime next week? Oh, so now I have to go in to my calendar and figure out a time to meet with you, and you're asking me, right? You want to make it as easy as possible to get a meeting with you. Like I said, this won't be easy. You're not going to get quick results, but the consistent application of this process is what wins over time. You can't do fits and starts. You can't also give up after 50 emails. It doesn't work that way. If you have a cogent investment strategy and you have good performance, which most people do, otherwise they wouldn't be in the business, the only way to get out in front of these people from a sort of a cold start is cold outreach. It's the only way. Now, I'm going to sprinkle in another secondary channel. So another thing you should do if you have a long-only strategy or an LP, mostly long-only, is start establishing relationships at the home offices of the banks and broker-dealers. I think of locally here, PNC, JP Morgan Private Bank. Don't worry about your size or length of track record. Simply do the cold outreach to them as well, just saying you want to introduce yourself. This is who we are. This is what we do. I know you invest in these asset classes. Can you meet May 4th at 3 o'clock? Make sure you get in front of those key decision makers based upon your asset class at those banks and broker-dealers. Big three wirehouses would probably be a little bit different. That's a harder pull, but RBC, Raymond James, PNC, LPL, all of those are looking for your type of product. And it's absolutely important and imperative that you start those relationships early and start trying to get in front of them. Now those will be longer term wins, whereas the RAs can be 6, 9, 12 months. The platforms can be 9, 12 months, 2 years, 3 years, but get the sales cycle started, get them to get to know your strategy, and you don't know what's going to happen. They're investors, they're always looking for new and interesting investment ideas to put on their platform, and in a lot of cases they do have emerging manager programs. The third area that's a little bit more R&D would be the emerging manager consultants and the emerging manager programs. In the show notes, we'll have all this information of the different public pension funds that are prime targets for emerging manager programs. It can be a good start. It can give you a good asset base. It's lower fees, but you have to just get out there, do the cold outreach. We're an emerging manager. This is who we are. This is what we do. I'd like the opportunity to introduce myself. That's all you're trying to do, right? Fundraising, it's all just about introducing yourself and familiarizing them with who you are and what you do. So those are the three sort of core channels. You've got your RAs, you have your banks and broker-dealers, and then you have consultants that have emerging manager programs, in addition to all the public pension funds that we list in the show notes and in our database of those emerging manager programs. And it has all the contact info, everything that you need is in our database if you're a subscriber. But all of that information will also be for free in the show notes. So the next step here is, how do you get leverage? You are in a unique spot to be able to do this. We don't work with anyone that won't do this. You have to do a quarterly call. Now, larger firms, struggle with this because there's just too many products to do too many quarterly calls, right? But emerging manager, in all likelihood, you have one product, which is ideal. So we'll also put in the show notes our ebook for how to do a quarterly call. And the neat thing about this is, back to the cold outreach, they now see your brand again. Save the date for Edgewood's Q4 quarterly call. And then there's 2 invitations. Then there's a day of, okay? So you're not asking them anything. And if you can put yourself in a position on this quarterly call, and I'll walk you through the content, what you want to be seen over time as an incredibly insightful investor. So in your quarterly call, your prepared remarks for 20 minutes, you're sharing insights. And it's really critical, because I'll give you the reasons why it's so important to do this. Number one, it's giving them an idea of what it's going to be like to work with you. That's one. 2, they take your content each quarter and share it with their clients. If you don't create the content, they can't share it. 3, if you're doing it on a Zoom, they get to see your face, the white of your eyes, develop a relationship with you as they're watching it. And 4, you're creating content each quarter. You're creating a replay of the call that you can send out. You're going to transcribe the call, very important. Then you're going to summarize the transcription so they can have and get to know you and get to know the call in a variety of ways, right? A bunch of different ways. Importantly, also, once you start to build your client base, you want to send out a short summary, again, what you just did on the quarterly call, to your clients so they can take that summary. And a lot of them will just take a Word doc for all investments that each client has and send that to them. So you're actually doing the job for your client for them. So sending them the deck alone each quarter, you don't want to do that. You also want to add in the summary. But what I just said, by doing the quarterly call, you have your deck, you're going to go through your deck, and this is what the deck's going to look like. It's all in the ebook, but you always want to open it up with a 1-page overview of the company, then a 1-page only description of the investment philosophy and process, just a refresher, and then go through what happened during the quarter. And then you're going to talk about a stock or two. or an investment or two that you've made that will draw back to your investment process. Then you want to share some insights. Whatever you deem to be very interesting and insightful that you're seeing in the market, or trends that you might be seeing that you want to share in your asset class. So then people start to see you, hey, I'm going to listen to this call because they always share some very differentiated, interesting perspectives of their asset class in the market. And then you can do you can either figure out what you think the proper Q&A would be, then you always have 3 or 4 questions to close out. And you can ask your clients, hey, what do you think the questions should be? Or you're going to know yourself, hey, these are the 3 or 4 things that we should ask. So you close it out with Q&A. As I said before, there's so many reasons, as I just went through, to why you should be doing this. It takes time, but not a lot of time. And back to the emerging manager, back to doing more with less, this is a free marketing tool. We've been doing it since 2006. We've revised it, and in fact, you're looking at the desk in Philadelphia where our clients come down and actually film their quarterly call. I'm not saying you have to do that. Zoom is perfectly fine with a pitch deck, but it would be nice to see your face to kick off opening remarks just like this, so you can develop a relationship even if it's over Zoom. And that's kind of quasi-video. And then some people take it to this level. It's affordable for us to be able to have our clients come down and do it. Obviously, we don't charge them. And if you guys would ever have an interest in coming down, you can just reach out to me at guy@dakota.com. So as we're thinking about you as an emerging manager and the things that you need to be doing, it's the cold outreach against the channels that I mentioned, RIAs, banks and broker-dealers, and the emerging manager programs. Secondly, the marketing right around the quarterly call, all the content that it creates, you're building the brand. And remember, as they say, Rome wasn't built in a day. You have to be consistent, because if you're in the investment business, you're going to be here for a long time. The faster you are able to consistently do these things, it's going to give you ultimate leverage. And everything that I've gone through is just your time. There's really not a lot of expense here in terms of what you need to be doing, especially even like the T&E, the travel. If you're doing it in close proximity, there's generally more than enough investors in metro areas, depending upon where you're based, that will give you great opportunities. Now, one thing back to the RIAs, if you're even just covering 5 cities in the Northeast, at some point you might want to think about, you do a Midwest trip to Chicago, a San Francisco, LA, right? Those are great metro areas. For the most part, 50% of the RIAs are in the top 14 metro areas in the US. That's kind of the general math. And if you just get in that habit of the city scheduling and don't stop, over time, this process has gone extremely well for us. And so when I start to think about the leverage points, the last thing that I would mention that's very, very important for an emerging manager, you need to get leverage through the use of a CRM. It's so critical. And there's a lot of good ones out there. We happen to use Salesforce, which we love. It's not as expensive as you might think. So look into the pricing, and you might not need the highest tier. I think the lowest tier might be $150 a month. And it's an incredibly powerful tool. We have a great Salesforce integration. There's also a bunch of others that we list in our blogs, CRMs for investment firms, which we'll put the link in the show notes. And this is why it's so important for you to act like a big distribution company day one, because you need to get your contacts into your database, and then you need to get the meetings you've scheduled into your database. It's vital, because if you're doing this successfully, you're going to create a lot of meetings. And you can't manage it in an Excel spreadsheet. You can't manage it you can on a yellow pad, but it's going to provide you no leverage. Why? Because you need to run past activity reports of all the meetings that you've completed. So if you just look back over the course of 12 months, you're going to have done a lot of meetings. And you want to know exactly, you want to look at a list every single day of your past meetings, because that triggers sales actions. And having it organized, the retrieval is 1 or 2 clicks. You don't need to figure all this out. And trust me, the brain can only handle so much information. So using a CRM is vital. So that's point number 1 on the CRM, is just get the meetings you've scheduled so you can run past activity reports. 2, make sure you get a minimum of a couple of sentences into the database of who you met with and what happened and what the current status and the next steps are. Just so you can run reports and look at that, and then because if you're doing 20, 30, 40, 50 meetings, that's a lot of information to remember in your head. You just need to put it in. You don't need to go crazy, right? Because some people are like, well, I'm not a data entry person, just put what happened in the meeting. It's going to give you a ton of leverage. The second part to a CRM that's very vital is, and by the way, we have a whole CRM capability. It's not as robust as Salesforce, but it has the 8 things that you need within our platform. So our platform can also serve as a CRM as well as a database. The second thing you need to be able to do is create opportunities. So once something goes from the initial meeting and they show interest, because you ask the 2 tough questions to close out the meeting, which is, hey, is this something that you would see fitting into your portfolio? If they say no, mailing this. If they say yes, then you say, will you be doing a search in the next 12 months? Can you make our final close on 12/31/2025? So you gotta ask for the order if there's interest to close out the meeting. If there's interest, then you create an opportunity. And that's the pipeline that you create, and that's what you share with your boss, and that's how you manage the business, because the pipeline is going to be what's real, right? The past activity reports are going to show you what you can go back to someone, but then once it becomes real, you have to create an opportunity, you put a stage on it, and then you sort it by, closest to closing at the top, all the way down. I can't tell you what leverage you get because you live in that pipeline report on a daily basis, because you're always trying to move the bottom ones up, and you're trying to think, how do I take action against these accounts to move them up? I strongly recommend whatever database you use, you create 2 text box, custom text box, and that's in the report, and it should say current status, so you can fill in the current status and the next step. Those have to be filled in. Why? That gives you discipline, right? Because if it's blank or you don't really know what the current status or the next step is, then you don't really know where you are. And if you're the salesperson and you're reporting to your portfolio manager or the CEO, you're going to want to sit down with them weekly and review the pipeline report. One of the most important things I can tell you right now is sit down weekly with that portfolio manager to go through your pipeline. Here's a current status, here's next step. Avoid saying great meeting, oh, we had a great meeting, there's buying signals. No. What happened in the meeting? Did you ask for the level of interest? Ask for the level of interest to close out the meeting. Most people don't do that at their own peril. If you can do that, you're going to know exactly where you stand. You can put that in the pipeline report. So now your CEO, partner, portfolio manager, whatever that might be, they are going to go through that, and they're going to know exactly where you stand in the job that you're doing. And then it's a forcing mechanism, because it forces you to do all the things that I just said, right? If you don't have to sit down weekly and report progress against your plan, you can be left floating away. And then all of a sudden, 90 days goes by and you didn't have the discipline. Then they ask you, hey, so where do we stand? Are you ever going to show us our pipeline? Well, weekly updates on the progress against your sales plan, against your RAs, your banks and broker dealers, and your emerging manager programs. It's just those 3. Create the pipeline, share the activity, share the feedback on a weekly basis. It forces you, because no one wants to show up to a meeting with their boss with a blank pipeline, okay? That's why you do it. So those are the core elements, okay? I established who you should be selling to as a smaller firm, discretionary platforms and emerging manager programs, discretionary assets, meaning RAs. Second, your quarterly call, critical. Third, massive leverage point, which is your CRM. Information will all be on the call notes, and I can't thank you enough for joining me, solo guy, here on the latest episode of the Emerging Manager Growth Show. Have a great day. Hello everyone, I just wanted to say thank you for watching the Emerging Manager Growth Show. I hope you got a lot of value, and I think, as you know, we shared an enormous amount of information about metro areas and other type of information, RIAs, etc. All of that information exists in Dakota Marketplace. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.